right, well, thanks everybody for coming out to the post-lunch panel here. We've got a really great lineup of speakers here. So to my left, we have Kate Prohaska, who is from the US Chamber of Commerce, where she is the Vice President and Regulatory Counsel at the Center for Capital Markets Competitiveness. We have Daniel Gorfine, who heads up Lab CFTC at the Commodity Futures Trading Commission. And we have Ryan Zagone, who is the Director of Regulatory Relations at Ripple. So yesterday we had the privilege of hearing from a lot of, we heard from 2 members of Congress, we heard from several speakers on kind of US germane regulatory legal issues, from token taxonomy to money laundering, sanctions, and we're going to kind of continue on that theme today, but we're really going to try to take a bit more of a global approach and analyze the question of how does the U.S. fit into this new globalized technology, this global, decentralized technology? How does the U.S. maintain its competitiveness in these areas? What is being done? What needs to be done better vis-a-vis? There's kind of a global race to capture the benefits of this technology, and how is the U.S. kind of holding up in that race? So to kick off here, I'd like to just turn to Daniel first, and I'd like to just ask to give you, or have you give a bit of a TLDR of what Lab CFTC. I mean, you guys are really at the kind of the tip of the spear of like regulatory innovation in the U.S., of kind of being a bit more fintech forward, liaising with innovators, trying to be a sort of a innovator-friendly face to a regulatory agency. So maybe give us some color on that.
Sure, but first I got to start with a quick comment about dress code. My question is, who's the innovator here and who's the regulator? I mean, I was trying to maintain some street credit here with my jeans, but I feel very out of place. Anyway, so let me just give a little context around Lab CFTC. Really this came out of the vision of our chairman and his fellow commissioners that the markets are increasingly seeing technology permeate all aspects of our market. So you can call this digitization process. And so there was a view within the commission that we needed to make sure that we're doing proactive things to keep pace with changes in our markets. So for this reason, in 2017, the CFTC launched Lab CFTC. Our mission is to facilitate market-enhancing innovation, help to inform policy, and then make sure that as an agency we have the right regulatory and technological tools and understanding to keep up, essentially to skate to where the puck is headed. I'll unpack that a little bit and just kind of briefly mention our 3 primary work streams that we pursue to execute on that mission. The first prong is something that we call guide points, and this is the idea that we spend a lot of time engaging with innovators. And to us, an innovator can range from a startup, it can be an established financial institution, it can be a technology company. Essentially, anyone who's using technology to do innovative things in our markets, we're interested in talking to them. There's a dual value proposition there. For those sitting down with us, sometimes they're trying to get a lay of the land. They want to understand the alphabet soup of regulators in Washington. Others may come in and point out where there's particular friction or ambiguity in rules. For us as an agency, we get to learn a lot through these types of conversations. And essentially, over time, you start to see what's coming around the corner. So it can be very valuable in informing us. The second prong is something that we call CFTC 2.0. And this is the idea that as we identify promising technologies, how can we help to further stimulate them or potentially incorporate them ourselves? We'll do things like innovation competitions. And we're currently scoping out the idea of developing internal pilots and proofs of concept around certain technologies. The last piece, which I'll mention just briefly, is essentially we've created an in-house think tank at the agency. We spend a lot of time kind of collaborating and helping to educate some of our peers, the commission and staff. That has the ultimate multiplier effect on our work. We also spend a lot of time collaborating with other domestic and international regulators. And I know international will be a big topic today, so I'll maybe hold in going into more detail there.
Excellent. Thank you for that. Turning to Kate here. So the U.S. Chamber of Commerce, I think when most people think of this organization, they would associate with kind of the titans of industry and the Fortune 500 companies and the industrial giants of the 20th century. Maybe talk a bit more about what is the Chamber's interest in blockchain and in particular financial technology and some of the innovation that you're seeing, the bootstrapping innovation you're seeing from some of these startups and entrepreneurs that would come to a conference like this.
Sure. So just to back up a little bit, so the U.S. Chamber, for those who aren't aware, is the biggest business federation in the country, so pretty much in the world. We have 300,000 direct members and 3 million indirect members. So we, are looking at everything from tax, trade, international. We have a huge division, and I've been working closely with them in kind of the fintech and blockchain space. I'm a native Californian, had no idea what it did before I got to DC, and so just want to give a little bit more background. So I'm in our policy division, which is my very long title, of Center for Capital Markets Competitiveness. So what we really focus on is capital formation and innovation. So this is why we've really stepped into this space, is looking at, over the last 20 years, it's gotten harder and harder for companies to go public. So let's try to look at, how do we raise capital more effectively and efficiently. And so that's why we've really gotten into this space. So over 2 years ago, we built out our FinTech Innovation Initiative, where Ryan is quite a participant, and we are so glad to have him. And Daniel actually spoke at our November event, so happy to be with everyone on the panel. So what we did was we released a set of principles last July at an event with Congressman Hale, Congressman McHenry, and two of the, and this covers kind of a broad swath, so from everything from online lending, payment processing, sandboxes, no action letters, different things like that, and then also crypto and blockchain. So in the crypto and blockchain bucket, what we look at is regulatory certainty. I know that this kind of two words that are thrown around a lot. What we mean by that is, having the regulators like Daniel who are really leading the way and having an open door policy, and then having kind of follow up of, okay, well, we see a pain point here, let's try to give a little bit of clarity. Another thing that we've been doing is working with Capitol Hill, trying to explain that, it's not all just Bitcoin, and different things like that. There's a lot of different uses. So I think that there's a lot of education that still needs to be done in DC, and that's why we've been excited to support Congressman Davidson's Token Taxonomy Act. We just sent the letter of support on Monday to kind of go along with consensus. And so he's been very, leading the charge, Congressman Emmer, and it's been really exciting to see a bipartisan effort, which isn't always the case in DC. So we've got Gottheimer, Soto, Tulsi Gabbard on the Democrat side, and then Emmer, Davidson, but a lot on the Republican side as well. So excited to see how it takes shape. But also just from a U.S. Chamber perspective, as to Daniel's point, it's not always just the small startups, as we know, but a lot of our larger kind of titan of industry members are also very involved in what they can do in this space.
Excellent. Thank you for that. Turning to Ryan here. So Ryan, Ripple is obviously quite engaged heavily on the regulatory front in both the U.S. and internationally. I'd like to kind of pivot this conversation a bit more toward, give it a bit more of an international flavor. So I was hoping you could give a little bit more color about just kind of what you're seeing, the U.S. vis-a-vis the rest of the world on this front.
Yeah, certainly. Ripple is a company that's using blockchain and digital assets to build new payment solutions, focused a lot on cross-border payments, so remittances and SMEs. We have 200 customers spanning the globe. So we've had, in the launch of those products, we've had a lot of global interaction and coordination. I think to put a point on where we're at today, I want to look back to where we were a year ago, where we had several countries raising red flags on crypto risk. So there were France and Germany having very negative statements, some floating a ban, and a proposal submitted to the G20, which the G20 took up to assess what the risk is of crypto. I think the industry then had, the red flags or the alarm bells were ringing that there's a conversation around risk here that we need to take a serious look at. Fast forward to where we are today, countries have looked at these technologies, recognized where the risk is and how to start to mitigate that, but also recognize the potential. So what we see in the market today is a much more balanced view in many countries around how do we set rules that address risk, but also enable adoption of these technologies. I think the title of this, The Race for the Future, is appropriate. What we do see in the market right now is a race, and it is a race for countries to become the capital of innovation and the capital of finance using these types of technologies. So that race is taking shape right now on the policy front, where countries are coming forth to paint the rules of the road. So individuals and companies in the sector know what the speed limit is as they're traveling down this path. There's a couple key countries I can point out that we think are moving ahead rather in a very great direction. Abu Dhabi in the Middle East has what I think is the most comprehensive framework for crypto assets, particularly on institutional adoption. France and Switzerland and the UK and Europe are all leaning in. We think those are hot markets that will be driving more innovation and more companies. And then Philippines in the APAC. Philippines has a framework, or one of the earlier countries to put forth a framework for looking at clarifying how and where crypto technology can be used, with a key focus on ways it can be leveraged for remittances. So how do we improve access to financial services? So we see in the market now it is this race, and it's a race to own the technology, own the development, and be a hub of finance. That's a stark difference from where we were a year ago, where it was mostly focused on risk.
So to what extent does the policy, or, I mean, there's a lot of, if we're thinking of, okay, which one country is going to win the race? The policy angle is one aspect of that, right? You have, you could make the argument that, well, maybe if the U.S., I'm not making any judgments here, but say the U.S. has, a subpar regulatory structure for fintech and crypto, but we also have the biggest pool of developers. We also have the biggest pool of existing capital, where somebody like Bermuda, or they might have a great regulatory framework, but they don't have those other things. So how important of a piece, I guess anybody could answer this, but how important of a piece is the policy aspect into baking that broader pie? If you want to take that.
Ben, I think it's a critical one at first, but there's not the only piece of the puzzle. There's several pieces like market structure, the size of the market, all the way down to education. Do you have the skill set and technical expertise in the market to build those types of companies or products? And then the rules of the road as well. I think there's like several pieces to the puzzle. A policy is a key one because I think it's one of the first ones you look at to see when you're entering a market.
Yeah, and I'd say from a U.S. Chamber perspective, I think that we focus on two things. One, we don't want companies going abroad because that obviously takes American jobs. And then two, it would be great to have our regulators writing the rules as opposed to, us kind of following after the fact. I mean, so in the Davidson support letter, and I think that a lot of people use this analogy, but we look at kind of the early days of the internet, whether we're going to lean in, and kind of see how this comes to fruition. Clearly, we would have completely different daily lives and the way we work and communicate and all of that, or are we going to try to squash this? And so that's what we've been trying to, shift the dialogue about. To Ryan's point, it was all focus about this is risky, we're, AML concerns and all of that, and I think that it has shifted a bit, and we've been pleased to see that.
Great. So over the last year, there's been, globally and also in the US, there's been a lot of talk about regulatory sandboxes. Like we had the state of Arizona that passed their own regulatory sandbox last summer, I believe, and there's a couple of companies piloting there. Lots of other countries globally have been pursuing this as kind of a means of trying to sort of kickstart innovation. I think the jury is still kind of out on whether these are good ideas or not. I think I would kind of like to get some perspective from the panel on what are maybe some of the pros and cons of this particular approach.
Yeah. So I do want to just go back and make one overarching, maybe slightly more academic comment about different regulatory landscapes, and then that ties into the sandbox conversation. The one thing I would just flag is there's a lot of talk, obviously, about the current US regulatory system, global systems, and my one observation on that is that there's always pros and cons and trade-offs to different types of regimes. Ryan and I had a chance to talk about this a little bit earlier on. There are some systems where you have a single central regulator, and that can definitely drive certain efficiencies. But remember, then you've got one single regulatory framework, and there's not kind of the opportunity for different agencies to be specialized in particular areas. And the way that the US system has worked, understanding that there can be some areas of friction or ambiguity as between regulators, but that has allowed for the development of the most robust and deepest capital markets in the world. So just, as you think about different trade-offs and regulatory trade-offs, I think that's an important point to keep in mind. That ties to this issue of sandboxes. So, another observation there is that a sandbox concept is not a panacea for how you engage with technology and innovation. It's one tool. It could be a really important regulatory tool, But it's a tool that, again, will have certain trade-offs. And a lot of what's said about sandboxes is very jurisdiction-specific. It ties back to my overarching comment on, do you have a single regulator? Do you have multiple regulators? Are they principles-based? Are they kind of more rules-based regulators? Those questions will drive what a sandbox actually means in practice. I can say from a CFTC perspective, we certainly have scoped the notion and topic of a sandbox. But what we actually found early on is that maybe specific to the CFTC, by statute, we are a very principles-based regulator. Our markets tend to be heavily institutional. They're risk transfer and hedging markets, not as much of kind of the retail investor-facing type of a marketplace. So as a result, and because we are largely principles-based, we've been able to engage with various innovative models in a way that would fall outside of what's being kind of termed a traditional sandbox per se, but that hasn't precluded the ability of innovative new models to move through the agency. So in my view, at the end of the day, the goal and the objective of a sandbox is to make sure there's a space for regulators to be able to engage with innovative business models and allow new business models to emerge. If your existing parameters or system allows you to do that, then there may not be the same need for a sandbox as we might see in the UK under the FCA or in other jurisdictions. So that's a very kind of long-winded answer to, I think, a very basic question is, what do we think about sandboxes?
No, but I think that's a very good point. I mean, I think there are so many different definitions on what is a sandbox, and that's the challenge, is that we're not speaking the same language. So so the Global Financial Innovation Network, as a lot of you know, it's kind of the 12 regulators who've come together, and they're looking at sandboxes. The CFPB is putting together a sandbox on their own. You guys are doing awesome things. So I think it's devil's in the details and what that actually means and how you define it. And what we say all the time is, if you're in this sandbox, because some people will say, I'm a grown-up, we don't need sandboxes. But it doesn't mean that all investor protections and consumer protections just fall away. It's kind of a place to kind of experiment, but strong investor and consumer protections are, of course, first and foremost. And then just another note on Sandbox, we don't want it to get to the point where it's kind of picking winners and losers, and there's such a high barrier to entry. So in our comments to the CFPB on their proposed Sandbox, we said, if you approve this one company for a certain type of product, there should be an expedited process for any other company trying to get into the marketplace, because we don't want regulators to start saying, well, we like that model, but that's similar when we're not on board with.
Just one other issue with Sandbox is that I'm recalling in the FT Alphaville, which is sort of a notorious critic of all things crypto, did a big piece a few months back kind of blasting the concept of sandboxes. And their criticism was that the companies applying for the sandboxes were just turning around and using this as marketing materials to say, hey, like we buy our token, we got approved for a sandbox. Are there some other risks involved with this that maybe folks aren't necessarily, haven't been fully baked in the decision-making process here? This is kind of just a curveball question, but any thoughts on that?
I wouldn't see it, because it's not like a fintech charter or something where there's a stamp of approval. A sandbox, it's at least my understanding, and this could be definitionally different with everyone else in the room, but I would say, it's solid parameters on the types of things that you need to do, and you're going to have your regulator in there at all times. And so, I think it's a good thing to have. I don't know if they would turn around and say, people could use it in that way, but I think that would kind of be abusing the spirit of it, the fact that your regulator is overseeing what you're doing, and therefore you shouldn't be kind of using this to just garner customers.
And look, I do think from a regulator's perspective that the concern of endorsement or picking winners and losers is a very valid one, and you certainly also don't want that to become something that's viewed as a prerequisite in the market. So the flip side is if you're an innovator, and you haven't gone through a sandbox effort, does that mean that potential banks that would look to partner may not partner because? So again, it doesn't mean it has to be that way. It's all in the design, and I think, as Kate said, the devil's in the details as to how you structure the sandbox effort. But again, if you view it as one tool in a regulator's toolkit, and there are many other ways to think about engaging with technology and innovation, I think there can be some value in learnings that come out of some of these efforts.
Great. So Daniel, sticking with you, so Lab CFTC is about 2 years old at this point, right?
That's right.
Approximately, or more, give or take a few days. But
It's May, so yes.
Yeah.
Happy
I'm
birthday.
looking at my colleague George, and I think that's exactly right.
So I would love to get, obviously it's setting up an office and saying, hey, come talk to us is one thing, it's a good step. But you guys have been in business 2 years now. Would love for you to share with the audience just what are some of the real meaty takeaways that you guys have had? I mean, I assume you've had hundreds of conversations with innovators and entrepreneurs coming in. What are some of the real sort of meaty takeaways from the last 2 years?
Yeah, so it's been incredible. I mean, so over the span of a few years, we've met, I think now with over 300 different organizations and entities. And we do this, as I mentioned, through just meetings. And we'll do that either informally in Washington. We do office hours around the US and actually globally. We're holding office hours again this week in our New York office tomorrow, and fully kind of booked for that. So we've had a really robust set of conversations. Now, I would kind of say that what have we seen? Two sides to this as well. For us, I think the learning is you don't necessarily learn something dramatic in just one meeting. It's the aggregate of hearing certain themes and threads where you start to make sense of what's real, what may not be as real, and that's really, really valuable for us as a regulator, so we do understand where things are going. For those that are meeting with us, as I mentioned at the outset, it really does range. I mean, we're not trying to create this, back to the point about sandboxes, this isn't a prerequisite. Folks don't have to come in and talk to Lab CFTC. It's not set up that way. We hear a really broad range of topics and questions from folks. I think one of the metrics we look at is there demand to continue to meet with us? And I know that sounds very basic, but it's real. I mean, if we're offering this as an opportunity for people to come talk to us, and there's not this organic demand for it, that would be telling. The fact is we continue to see, if not the same amount, maybe even more demands. I mean, how quickly we were able to fill New York, I mean, in part because of all that's going on here this week, but that's really valuable. I would say in aggregate, some big takeaways. I do think, back at the end of 2017 with the launch of Bitcoin futures, we had, as you can imagine, a lot of folks coming in and asking questions about jurisdictions. Where does the CFTC begin and end? Where is the SEC? I would say over the span of the last year or so, the collective understanding and knowledge has just expanded dramatically. I think that's really impressive. It's helped inform us. We've published a number of primers, one on virtual currencies, one on smart contracts. A lot of that was informed by the conversations we were having. And as I've said, I mean, the flip side is true too. You all have helped to inform us. And it's allowed us to continue a dialogue with the innovation community. We put out a number of months ago a request for public feedback on certain crypto asset markets and mechanics. We asked some questions about Ether in that context. And a lot of that was also informed by the dialogue. So it's been really rewarding, I think, and very valuable to us.
Great, great. Turning back to Ryan here, so kind of zooming out to sort of a 30,000-foot level here, when we talk about the race for the future of finance, and if we believe that the future is decentralized and this is all sort of like borderless, decentralized technology, why does this question of like who wins and who loses, or which jurisdiction wins or doesn't win, like why is this even relevant?
Yeah, I think it's a great question in that macro setting. I want to highlight the change we've also seen in the US before we get into the global picture. What we've seen in the US is an openness, it's a shift in posture, and a much more openness to engage in the industry and for creating avenues for companies that may not even be directly regulated to engage with regulators. So Lab CFTC is a perfect example of this. It's like an avenue that's been created to engage. We also see that at the CFPB, the OCC in their office hours, the SEC in their new FinHub. I think what is the industry is thirsty for right now, and I say industry broadly in both companies but also regulators, is clarity. So clarity in how the technology works, making sure they're not painting with the broad brush, and clarity from companies to understand what the rules of the road are. And it doesn't necessarily have to be, is there a sandbox or not, but is there an avenue to get me clarity? So you often hear companies say, we're going to go to a country that has a sandbox. I'd urge you to expand that horizon, to look at, is there an avenue in this country to engage and get that type of clarity? And I think that will open up your possibility for growth and for markets much broader and in I think, a much more practical way than looking at it very myopically, just sandboxes.
But why does it matter that the U.S. wins the race? If we were to be on the U.S.'s team, since we're in the U.S. right now, but why would it be important to the U.S. to win the race?
Globally, we're seeing this race to own infrastructure. So you see it notably right now in telecommunications, where there's an emphasis on foreign countries to own 5G technology. And there's a broad discussion in Washington around 5G being dominated by foreign firms and the US being reliant on foreign technology and foreign expertise. Now, what we want to make sure doesn't happen is that we repeat that in other sectors, like financial services, like healthcare, like broader commerce. And with blockchain and crypto, I think there's a recognition now that these will be part of future infrastructure. We want to make sure the US, I think it's important from both a national security and an economic perspective for the US to be a leader in that, to continue that legacy of innovation.
Sure. Kate, what would you add to that? Like, there's been a lot of talk recently about Huawei. The U.S. has been putting pressure on allies to not purchase 5G kit from Huawei because of concerns over, cybersecurity, like backdoor espionage. Do you think this analogy that Ryan's offering is an appropriate one?
Yeah, definitely. And I also wanted to add, Daniel mentioned this earlier, but I think it is complicated from the outside perspective, looking at DC and seeing who do we go to. But again, there's so many experts in the room, and there's a lot of people who are specialized in certain areas. So just the wealth of knowledge there, I think will be really helpful for this. And the fact that, it is an open door policy, and we have, longstanding Howey case law and different things like that to be able to look at. And I think that, the regulators have taken a great tact looking at it not from a technology-based perspective, but saying it's kind of more technology neutral. And so I think that, it's kind of a lot of the regulatory brainpower that we have, and then also the infrastructure.
Well, it sounds like with this framing, it really becomes more of almost you could frame it as a national security issue, right? Where it's, if the infrastructure and the rails of the future payments network are, are constructed by a company or a company from a country that we're not necessarily comfortable with for various reasons, that might be an argument that might, sway more people in Washington than like, hey, look at me, Bitcoin, it's great. It seems like that. Is that an argument that you're finding is resonating among policymakers?
Yes, I've had those discussions, and they do kind of, that does resonate a little bit. And I think it's, it's the challenge to inform certain lawmakers who just aren't familiar with it. And so, we're kind of starting at square one with some folks, like the people that I mentioned earlier, Davidson, and all the people who are a part of the blockchain caucus and very forward-looking, are very well informed. And then there are others, that we never see at those types of events. So I think, and everything with DC, it's a priority issue. If we're having to reauthorize flood insurance and then TRIA and all these different things, and we're kind of, and a budget, different things like that. If we're running from fire to fire, it's going to be hard to be more forward-looking. But again, I think the education has definitely caught on, and I think that people are starting to understand, the policymakers are starting to understand this isn't kind of a fly-by-night thing that's going away, and that they should really pay attention.
Got it. So last question, I'm going to shamelessly hijack Anthony Pompliano's closing question on his podcast, where he asks, if you could change any one U.S. law or regulation, which would it be and why? And he also asks if you believe in aliens or not, or do aliens exist or not? So answer both questions, please.
Oh, both?
Yeah, both.
Oh, okay.
No,
I didn't know
both.
we were doing both.
Well, you have to think on the fly here.
Okay, I can do that. Aliens, yes. I know that one for sure. And then, no, I don't know. And then secondly,
we
I
should
would
have a panel on that. I want to know how
Next consensus.
next time. And then to the more realistic question. So I'd say strict liability under Section 5 of the securities laws, just because, strict liability, you can't have, oh, well, this is, you made a good faith effort and we'll give you some forbearance there. And I think that would make companies pretty concerned.
So I'll agree, there are aliens.
Okay,
I'll
I'm
be
glad we got that.
As certain. I don't think I can answer that question about laws and regulations to change, but what I will throw out there is just, again, my 2 cents that I frequently say when I'm talking to the innovation community, which is just to bear in mind that understand it's difficult to navigate rules, requirements, especially in a heavily regulated industry like financial services. But just remember, as you're building your models, if you can build them in a compliant way, in the long run, that can prove to be a real competitive advantage. Because at the end of the day, you're talking about payment rails, you're talking about investment. This is financial markets and services. The US does have the deepest, most robust markets. you will be plugging into a very heavily regulated space. So think about that early. It's much, much better to have had those conversations early on than waiting till you're years down the road, and now you're stuck saying, well, what do I do now? So it's something to keep in mind.
Ryan?
I was going to go with no on aliens, so I think I'm in the
Oh.
minority. On policy, I think where we're at in the U.S. is there's been a lot of new activity amongst regulators in the industry over the past year. I would look to see that continue and coalesce in a coordinated strategy. I think that's starting to come together. We have momentum behind that. To see that come together, fully come together more over this next year, I think would be providing the clarity the industry is looking for.
Great. Well, for the record, I also don't believe in aliens, so me and
Oh,
Ryan
we're
are on the same
tied.
team.
We're tied. Okay.
But thank you, everyone. Thanks to our panel, and thanks for joining us today.
Thank you so much.